Two people can walk into the exact same bank branch on the exact same day. One gets a form letter and a fee. The other gets a phone call from a private banker before they even ask for anything. The difference is not luck. It is math the bank has already done about you before you walked in. Every major bank quietly sorts customers into tiers based on how much money they keep with that bank. You are never told which tier you are in, but it shapes almost everything about how you are treated. Let's start at 0, or close to it. At this level, the bank makes money from you primarily through fees. Overdraft charges, monthly maintenance fees if your balance dips too low, ATM fees outside their own network. This tier is not designed to build a relationship with you. It is designed to process your transactions efficiently and profitably. Customer service at this level usually means a general call center, not a dedicated person. You will likely speak to a different representative every time you call, and you will start each call by explaining your situation from scratch. This is not the bank being cruel. Serving millions of low-balance accounts through automated systems and call centers is the only way that tier is profitable for them at scale. Now let's move to around $50,000. At this level, many banks start waiving monthly fees automatically, simply because your balance clears their minimum threshold. You may start receiving offers for premium checking accounts or better interest rates on savings, not because anyone asked, but because you now qualify without trying. Your credit card offers often improve here too. Banks can see your balances across your accounts with them, and higher balances signal lower risk, which means better card offers, sometimes with more attractive reward structures. You are still, in most cases, without a dedicated point of contact. You are a valuable customer now, but the bank is not yet building a personal relationship around you specifically. Now here is where things genuinely start to shift. Let's talk about $500,000. At most major banks, this is roughly the threshold where you cross into what the industry quietly calls the mass affluent tier. Somewhere around this level, many banks will proactively assign you a relationship manager, someone whose actual job includes knowing your name and your general financial picture. You may start receiving invitations to private banking programs, personalized calls about your specific goals, and access to products that are simply never advertised to general retail customers, preferred loan rates, exclusive investment opportunities, waived fees across nearly everything. At this tier, the bank's incentive genuinely shifts. Losing a client with this kind of balance to a competitor actually matters to their numbers. Keeping you happy becomes a real priority, not just a formality. Instead of a general customer service line, you often get a direct phone number to your relationship manager, someone who already knows your account history the moment you call, no explaining your situation from scratch every time. Now let's go further. What happens at $5 million? At this level, you are no longer in retail banking at all, in the way most people experience it. You are typically moved into full private banking or wealth management, an entirely separate division most customers never even see the entrance to. You are usually assigned a dedicated advisor, sometimes an entire small team, covering investment management, estate planning, tax strategy coordination, and sometimes even introductions to specialized services like art financing or aircraft loans, depending on the institution. Nearly every fee that exists for ordinary customers, wire transfer fees, account maintenance fees, foreign transaction fees, is typically waived entirely. Not because you ask, because charging you those fees would be a strange way to treat a client generating this much value for the bank. Private clients at this level often receive invitations to exclusive events, early access to investment opportunities before they are available to the general public, and service that feels closer to a concierge than a customer service department. The contrast is genuinely stark. At the lowest tier, a mistake on your account might take days and multiple calls to resolve. At this tier, a single call to your dedicated advisor often resolves the exact same kind of issue within minutes. Here is the entire picture side by side. At 0, you are a transaction to be processed efficiently. At $50,000, you are a valuable account that qualifies for better terms automatically. At $500,000, you are a relationship worth actively protecting. At $5 million, you are a private client the bank is built around retaining completely. It is worth saying plainly. None of this reflects anything about your character, your intelligence, or your worth as a person. It reflects how a business chooses to allocate its limited resources, prioritizing the relationships that matter most to its own numbers. Understanding this system is not about resentment. It is about knowing exactly what you are working with, and knowing that better banking treatment is often available simply by asking, consolidating accounts, or moving your balance to a bank with a lower threshold for their premium tier. A useful thing to know. Some banks set their relationship banking threshold far lower than others. It is often worth calling and simply asking what tier your current balance qualifies you for, rather than assuming you already know. The system was never designed to be fair. It was designed to be profitable. Knowing exactly how it works is the first step toward making it work better for you.